I realized that, man, that long-term passive income from the rentals was really just my favorite thing in the planet.
Yeah.
It's just if I get off the couch or not, that money is coming in.
Absolutely.
And so I decided I need to scale this bigger, and I started learning about syndication. I guess the rest is history.
Welcome back, everyone, to the Passive Road to Retirement podcast. I'm your host, Andrew Jarrett. Today, we're joined by Michael Wagman. Michael used to work in high tech and lives in Israel. He moved back to the US at the age of 25 and decided to start flipping houses. Eventually, he got into smaller multi and then wanted to learn syndication. He is now a managing partner with Nimble Capital Group. Michael, welcome to the show.
Thanks for having me, man. It's good to be here.
Yeah, definitely. Good to see you. So maybe for the audience, you can give us just a more detailed background on how you transitioned from tech in Tel Aviv to flipping houses in the US.
Sure. Yeah. I mean, you hit the nail on the head there, but yeah, I graduated college. I grew up in California, and when I graduated, I was mistaken into believing that there would be jobs waiting for me. So, I searched for a job for quite a while and couldn't find one. So I just kind of up and left, and I moved to Tel Aviv. Tel Aviv is a high-tech capital of the world. So if you speak English and can sell over the phone, you are infinitely employable. So I quickly found myself working in high-tech companies as a SDR, an account executive, making, pretty good money. And eventually I got to a point where I had a decision where I could keep hopping from, there's this kind of cycle people do there where you work for a company for a while and then you try to move to another tech company and increase your base pay. And it's just, you could kind of keep doing that forever. Yeah. But I said, I've made a little bit of money, and I decided I didn't want to work for anyone else ever again. So my mom had moved from California to Florida in that time. So I decided I'm going to move back to the US, and I landed in Florida. And, in Florida, you can buy a house for $66,000. In California, you cannot buy a room for $66,000. Right. Exactly. So, yeah, I'd been watching too much HGTV. I think that's really what it was. and I said I could do that better than they could. I didn't know anything about real estate. I said, oh, maybe I'll get my real estate license. Then I'll know everything. Well, that was also not true.
Yeah, it doesn't work, right?
That is a very low barrier to entry in that profession, let me tell you. But yeah, I jumped in and I bought my first house, and I said 66 because that's actually what I paid for the first house.
Nice.
I used all of my own money, all my own cash. I made a lot of rookie mistakes, but I never lost money. So I think the first house I probably profited like 14 grand, and that was before taxes.
Yeah. Good lesson, right?
Yeah, but I did it. I took that step and I jumped in, and then over the course of the 3 years following that, I managed to flip a bunch of houses and slowly acquired some smaller multifamily rentals. I tried to do everything, man. I tried to do wholesaling. I tried to be a realtor. I did Airbnbs with some of my smaller multifamily rentals, but eventually I realized, I did house hacking too. So I bought a quad and I lived in one of the units. Yep. But yeah, I realized that, man, that long-term passive income from the rentals was really just my favorite thing in the planet. It's just, if I get off the couch or not, that money is coming in.
Absolutely.
And so I decided I need to scale this bigger, and I started learning about syndication. I guess the rest is history. I moved to Phoenix. I spent most of 2020 kind of in a mentorship program, learning how syndication works. And now here we are 2 years after that, and we're doing a lot of deals.
Yeah, that's awesome. Yeah, you got quite a bit in the pipeline from talking to you the other day. So
yeah,
that's
things
great.
are moving real fast.
Now, how did you learn about syndication? And, is it just I just want to get bigger properties, more cash flow? Is that what kind of drew you to it? Or what was your, your main driver for that?
It's funny. I had a phone conversation with a guy, and I don't even remember his name now. It was just a random phone conversation, and it really kind of changed my life a little bit, to be honest with you, because my goal was to ultimately get 20 units of smaller multifamily in the Florida area where I was living, kind of in Central Florida. Um, and and then I had this phone call with this guy, and he was like, 20 units, you're thinking too small. And I was like, what do you mean I'm thinking too small? And then I got the book Multifamily Millions by Dave Lindahl. I read that and my brain just exploded. It was pretty much game over from there. And yeah, I wanted to go big. So
Did you end up selling your smaller multis, or did you keep them?
I did. So I moved to Phoenix right at the start of 2020, which was interesting timing, right before everything shut down.
Yeah.
And over the course of 2020, I had 8 units there that I sold off and profited pretty nice. Now looking back, I probably would have profited much nicer if I held them on just another 2 years. But
yeah, for sure.
Nobody knew what was going to happen at the start of 2020. And I made some money, and all of that money became seed capital that I still use today. Every time we need to do an earnest money deposit or something like that, it really allows us to get into more deals.
Nice. That's awesome. Yeah, the market's gone crazy. I mean, who would have known we'd be looking at this kind of appreciation, 2 years after a pandemic. So
yeah,
pretty insane. What maybe you could describe the first syndication deal you did, what kind of financing you got, maybe how it differs from single family, how it was raising capital, your first time?
Yeah. So the first syndication deal, it took us a while to get. In the beginning, it was a process of me really kind of out there by myself thinking, I need to do all the broker relations. I need to raise the money. I need to underwrite every deal. And, it was kind of a one-man shop. And the truth is that multifamily is a team sport. It really is. So I was fortunate through a Facebook group to meet my current business partner, Mike. And Mike really solved a lot of the issues that I was having at the time, because I was going through like a shotgun approach where I was flying to South Carolina and to Tennessee and kind of all over the place to look at deals. And I had one broker over here and one broker over there. And I had no kind of like hyper focus on a specific geographic region. And then I met Mike, and he had already been focusing heavily in the Southwest. And I solved a problem for him. He actually had a deal that was in best and final, and his sponsor dropped out. And he reached out to this Facebook group, and I happened to know the sponsor or somebody who could sponsor the deal. So we started talking about what that partnership might look like. He ended up not getting that deal in the end, but I did hook him up with the sponsor for it. And then we just, really hit it off. And that was about a year and a half ago now. So we've been working together ever since. And let's see, we got the first one. It was supposed to be a trio of properties, and we only ended up purchasing one of them. This was a 60-unit property in Las Cruces, New Mexico.
Okay.
And I tell people this all the time. It is pretty much the opposite of what syndicators say your first deal should go like. So I think we were blessed in that regard. I mean, it was really smooth. The broker was excellent to work with. The seller was really patient with us. We got everything we needed in a timely fashion. And we managed to do the raise entirely by ourselves without capital raisers, the first deal. And it's just been an absolute cash cow since then as well. So I will say that we've had deals since then, which are not nearly going as smoothly. As far as, the process of being under contract and dealing with sellers is concerned. But the first one was excellent. Yeah. It was a great intro to the industry.
That's awesome. Now you still hold that one, and what's your plan? What's your plan with it?
Yeah. So it's, we've been really fortunate. It was the last property that the seller owned, and he hadn't really raised the rents in like 3 years. And so we're doing a lot of exterior improvements now. We've owned it for gosh, we must have closed in May of 2021. So really been doing this less than a year. But so in about 10 months of ownership, we've been able to capture almost a $200 rent increase with minimal interior
Nice.
improvements. But we're doing a lot of work as far as exterior is concerned, parking lot resurface, just entire new parking lot, really. We're adding kind of an outdoor amenity area with, pergola and grow and stuff like that.
Mhm.
And we're working on renovating the laundry area as well. So, we've been really fortunate in that there was not really a lot that needed to be done to the interior of the units.
Nice.
That being said, if you know Las Cruces, you have this beautiful mountain range near there called the Oregon Mountains, and our property sits at the top of a hill with just sweeping mountain views.
Wow.
So a certain portion of the units are going to be, maybe a slightly higher premium, a slightly higher class. We'll go in there and do backsplashes, maybe granite. I don't know that that's entirely necessary, but nice floors, nice cabinets, and if they have a mountain view, we'll be able to capture an additional premium for that.
That's awesome. So basically 200 a unit plus maybe more of a bump on a premium unit.
Mm-hmm.
It's incredible.
And we purchased that so 10 months ago for about, I want to say 4.1, 4.2, something like that.
Mm-hmm.
And today it's already worth, I think we got a broker's opinion at like 6.4.
Really?
And
Wow.
so we're well ahead of our year 2 metrics, both in terms of cash flow and appreciation. And it's not even been a year yet.
That's awesome. Yeah, the inflation in the past 12 months has been crazy, huh? I don't think it's going to be stopping either. Personally.
No, but it works in our favor.
Exactly. Now, what kind of mindset challenges have you had, being younger and getting into the business, and anything you've had to overcome that you could share?
Yeah, tons. So, I guess first of all, I'm 30 years old. Most of my friends are between 20 and 28 and not really in a position to invest. And, I have to find people who are, and typically they're 10 to 15 years older than me, and so that was a bit of a hurdle in the beginning, but now, I have no issue with, talking to people and raising capital. That's really kind of my area of focus. I would say that, like I said, my business partner, he's really excellent with underwriting and broker relations, going back to the team thing. I focus on a lot of the capital raising and marketing strategy and everything like that. And then, since then, I would say there are some crazy things that have happened. Just 2 months ago, we put in an offer on a property that was $100 million. Right.
Wow. Yeah.
Yeah. We offered 99 and we ultimately were, I think, in second place on that one. Wow. Somebody offered over, like they offered 101 or something like that. But, that was a huge mental hurdle to overcome. Like, are we really doing this? Are we putting an offer on $100 million property? I mean, just saying $100 million is pretty intense, right? But the math made sense. And we have the connections now in terms of institutional financing and investors to take something like that down. So, there's just, even after the first deal, there's a lot of like little mental hurdles you have to overcome in this business.
Yeah, I mean, 100 million, the capital raise on that would be pretty significant.
Yeah. Even if you get institutional money involved, you're still looking at, so let's call it 33 that needs to be raised. At least maybe 15, 20 of that comes from institutional money, but then you still got to raise 10 or 15 mil.
Yeah.
Right? Yeah.
Yep, exactly. Well, that's cool. Can you give us an overview of your business model, Nimble Capital Group's model of how you guys buy?
So we actually have 2 arms of the business. So ideally, and this is really the one I focus on more, is value add multifamily. We're looking for properties that, are below market rents. I mean, this is kind of your standard thing that a lot of syndicators are looking for. It's the golden goose, rents, like our first property, the rents are $200, $300 below market, minimal improvements. We want to do maybe not the hairiest deals, but deals with some hair on them so that we can go in and actually reposition and improve the properties. Ideally, we're looking for something large enough to have its own leasing office, because there's a lot of advantages that come with properties of that size where everything is self-contained. But additionally,
is that like 75 and up, or what number do you usually?
Yeah, closer to 100, I would say. Yeah, it typically has its own leasing office, and I mean, we're looking at 200 and 300 unit properties too. We are closing today or tomorrow on a 200 unit property in San Antonio.
Congratulations.
That one's been a journey. We've been under contract for nearly 4 months on it. So
really
getting that
not as smooth as the first one, right?
Not nearly, no. It's come with some interesting challenges, but it's actually a sweet deal. Dealing with sellers and dealing with brokers isn't always like it was going to be on the first. But yeah, so, and then the other side of our business is we're actually doing development and redevelopment. So we bought 14 acres of land here in Casa Grande, Arizona, which is a city that's going to undergo tremendous growth. And we are in the entitlement phase right now, where we're going to be building 176 units on that. And we also have a commercial property, which is sort of a mix of retail and we're putting in a restaurant and brewery. So we're redeveloping that as well. So
nice. Is it planned to hold those, or kind of syndication model and sell it, or what are you thinking?
That is a funny question, because here's the thing about syndication. You are ultimately responsible. You're the fiduciary of your investors' money, right? And investors don't like it when you keep their money longer than 5 years typically. Right. So all of our deals, we try to write into a 5-year framework. If we can't conservatively provide a 2x equity multiple in 5 years, it's probably not something we want to get into.
Right.
Anything better than that or shorter than that is very attractive. However, the longer you hold the properties, the sweeter the returns keep getting. If I wasn't responsible for returning investor capital, I would want to hold these things forever.
Right, exactly.
So, there are some ways that you can do that in the end of the deal, and potentially buying out your investors to keep the property. And ultimately, I think that would be an awesome thing to accomplish. But, the other option is you do JVs. So we have a 20 unit under contract in New Mexico right now. A little bit of a smaller deal, but, the raise on that is sub 500K, which means probably don't need to syndicate that. And that really opens up a lot of doors as far as what kind of cash flow you're entitled to, because there's no GP anymore, right? So, and how long you can keep it. And I think that's pretty cool too. Yeah.
Absolutely. Now in that 20 unit, how would you have the management set up on that? Would you pull from another property you have, or just,
so that's in the same city. That's also in Las Cruces, New Mexico. So it's just about 4 minutes down the street from our other property, which, I really like that market. It's kind of a little sleeper market. It's actually the second largest city in New Mexico. But if you ask people, where's Las Cruces, most of them won't know. Well, it's actually just 30 minutes across the border from El Paso, Texas, down there in southern New Mexico. And, New Mexico State is there. You got White Sands Missile Base. And I mean, we're just having an absolutely fantastic result from our first property there. So we want to get more. It's also one of those markets where there's like 5 or 6 families who own there, and they just kind of trade amongst each other. It's been difficult, to sort of break in, but anything we can get, we want to get there. It's a cool market.
That's awesome. Yeah. Nice. Now, what are your personal goals for 2022? And then what are your company goals as well for this year?
Personally, my goal this year is to entirely automate my marketing funnel. So new website, social media presence, growing followers, growing our investor base. That's really where I put my time and effort into the business on a daily basis.
Mm-hmm.
And as far as the company goes, we're on track to probably add over 800 units this year.
Nice.
As of today or tomorrow, our portfolio value should exceed 50 million on active under management. And I could easily foresee us getting to 100 million by the end of the year.
Yeah, that's incredible.
Yeah.
Awesome, man. Now, how is capital raising? Has it been difficult or gotten easier, after that first deal? Just have more people coming in the pipeline, or how's that been looking for you?
It's been a mixed journey. Because the first couple deals is all friends and family money, and 506B raises and things like that, and I was extremely excited to try my first 506C and see, if I have the power to advertise the deal now,
right?
What kind of bites can I get? And turns out it doesn't actually matter, because nobody's going to invest with you if they don't know, and trust you.
True.
Right? Yeah. Doesn't matter how, you put a deal all over the internet. Maybe they know you now, but they don't like or trust you yet. Right.
Right.
So really treating every deal like it's a 506B raise is kind of the way we've had to go about it. And, we're growing our investor base, definitely. But, the first couple is maybe a friend or a family invests 100K or 50K with you, but then they don't have that to invest in the next deal. So like I said, my entire goal this year is to continue growing my investor base so that I can, have that money ready before I have the deal.
Yeah, exactly. And that's really a full-time job as well. I mean, I guess what is your daily, your daily routine look like as a syndicator?
Well, every day is different, certainly. But I do thrive in routine. So every morning I wake up and I make my coffee, and there's a great book called Miracle Morning. I don't know if any of your listen to it, but I absolutely love doing that in the Miracle Morning. He says there's 5 or 6 things you got to do every morning before you even look at your phone, and then you have the most productive day of your life. And it works. So
notice a big difference after you read it. Yeah.
Yeah. So that book changed my life for sure. And I like getting up, and man, it's a lot of phone calls. It really is. I'm fortunate in the sense that, being a business owner and an entrepreneur, you can kind of set aside the time to do the things you want in your day. If I want to go to the grocery store at 3 p.m., I could just do that. Right.
Right.
Or if I want to go to the gym at, 12, I can just do that. And that's great. But yeah, a lot of my day is spent on the phone.
Yeah.
Yeah,
I can imagine, especially with the capital raising side.
Absolutely. Yeah.
You've done a lot of investments, single family, flipping, small multi, big multifamily. What's, I guess, the worst deal you've had, or the biggest mistake you've done that you could share, and, kind of what you learned from that?
Yeah. Well, so I can actually tell you, this was my sort of aha moment of why I stopped flipping and got into and said, there's got to be a better way, and started focusing heavily on the rentals. So I had a deal that I managed to flip. It took a little bit longer than I wanted to do the renovation. And we got it under contract, full price offer on day one. I was looking at, I think, over $100,000 in profit on that deal. And as soon as that happened, I had already put that money in the bank in my mind.
Right. Yeah.
Mistake. Because sure enough, the buyer's realtor did not prep them for what kinds of things are normal on an inspection report, and what kind of things you can and can't expect. And this was every surface in this house was touched. There was nothing that we didn't go in and fix. But man, they saw that inspection report, and how inspectors are looking.
Oh yeah. They got to earn that fee.
They got to earn their fee. Exactly. And so, yeah, the buyer freaked out and went away, or, canceled the contract. And then over the course of the next 6 months, I had to keep lowering and lowering and lowering the price. And someone down the street sold their house, which became a new comp. And that chopped 40,000 off my value immediately. And I watched, over 6 figures of profit turn into, I think, 30 at the end. But it took me almost 11 months start to finish to make that 30K. And I was like, man, this really sucks. And that's just, when you're talking about residential versus commercial, the comps issue is a huge thing. Also, the fact that, a lot of people who are buying residential property, maybe it's their first time buying a house, or it's the biggest financial decision they've ever made in their lives. And there's a lot of emotions attached.
Right.
But when you're talking about commercial, those problems are fixed. These are professional operators. This is a business. You don't have that same level of emotion attached. Right. And the value of the property is determined by an equation which has physical levers that you can actually move. Yeah. That's the part that I love so much. I love having physical control over the value of the asset. I think that is just
not what the house next door sold for, right? Right. Yeah. You can increase your NOI, decrease expenses, and there's your value right there.
Absolutely.
I totally agree with you. So this is, the passive road to retirement. So I always got to ask, what would be your strategy, your number one strategy for the listeners to get that first stream of passive income?
Well, I'm biased, but I would say
deals.
First thing. Hey, I got come invest with me. Yeah. But I mean, passive income is really the goal, right? In this country, we talk a lot about retirement, and I just hate that word. I hate that idea of, working all your life to get a big check at the end, and then you're supposed to spend every penny of it and then die. Yeah. Right. Like, I think that's just ludicrous.
If you're in good enough shape to even go out and spend it, right?
Right. Exactly. And, but if you create passive income, then the money's there, whether you get off the couch or not. That's what I love. And, as far as me and my plan, as a syndicator and as a GP, you are typically not making almost anything in terms of cash flow in these deals. Not nowadays. All of the cash flow goes to the investors. But you do get an AC fee up front, and then you get the equity on the backside. And I'm pretty much done taking my AC fees at this point. So I'm going to roll all of my AC fees into the deal itself, because I want to be an LP on all of my deals. And, slowly build that up over time. And I have a goal of $1 million a year passively. And, that sounds kind of like, wow, that's a lot of money to make every year, maybe to some people, but like the road to get there is really straightforward. If you can, let's say, have $10 million passive, or, earning 10% a year. Yep. There it is.
Which you can do easily, right? I mean, in these syndication deals.
I mean, it'll take some time for sure, but it's a clear path to get there.
Yeah, exactly. I agree. That's a great goal. I have something similar along those lines.
Perfect.
So if you could step into my shoes for the interview, what question would you ask yourself that I didn't ask you?
Oh, man. I don't know. What's with all the guitars?
Yeah. I asked you that before the interview.
Yeah,
I know. No, that's true. Cool. Well, what's the best way for people to reach out to you? Either social media, website, whatever.
Yeah. So I know this is a lesser used platform, but I am very active on LinkedIn. I check mine every day. I try to post a lot on there. So I would say reach out to me on LinkedIn. You can go to my company's website, nimblecapitalgroup.com, and fill out the contact us form. Yeah.
Cool.
I look at all my LinkedIn messages.
Awesome. So now we go to our 5 to Thrive, which is our word association game. So basically, I'm just going to rapid fire 5 words to you and just give me back the first word or phrase that comes to your mind. Only caveat is you cannot repeat your answer twice.
Man.
All right. The first one, real estate investing.
Cash flow.
Cap rate.
Too low.
Right. For sure. Financial freedom.
Passive income.
Multifamily versus single family investing.
Multifamily.
Yeah. And Nimble Capital Group.
Oh, man. Can I say a sentence?
Yeah.
I guess I'll use the word explosive, because
I like
that
it.
has been our growth trajectory for the last 10 months, man. It's going fast.
That's awesome. That's a good answer. Well, hey, Mike, I appreciate you coming on, man. It was great to see you, and I appreciate your time.